This range-bound price action is normally considered to be one of the worst situations to trade. It is because the price action often hits your stop loss compared to the take profit. But in this video, I will share with you the easiest approach to enter winning trades before its breakout. In this current situation, you are highly likely to enter a short position based on its trend direction, but the counter trend breaks through the range, and that is because of the squeeze in price action. The classic method to find the breakout is using the DXY index. So if you happen to trade USD related pair, then simply open DXY on your chart and wait for the range to break. Once the range is broken, enter the opposing direction on your pair. This way you get the double confirmation on your entry, as well as the inverse correlation of currency and its strength. However, if you want to get the confirmation on the same window and screen, then we are going to use a simple indicator setup. To set up this on your chart, go to TradingView's indicator tab and search momentum squeeze, and add this one to your chart. You can pause the video anytime and set up your TradingView. After adding the indicator, you will see some red and green bars at the bottom of your chart. Next up, we're gonna change the chart to 30 minutes. And after switching the time frame, go to indicators setting, and under the style tab, change the green line to 0 and red line 2 color to full opacity. Additionally, to the plot, change price line to circle, as well as change the color 0 and 1 to light blue. And lastly, the color 2, make it thicker and whiter. Let's get to know this indicator. We have green bars and red bars. There are some white circles as well as some blue circles. It looks complicated, but the squeeze momentum actually demonstrates two things only: volatility and momentum. The bars of the indicator show the strength of momentum in any market. Here the green bars showing the bullish momentum, and similarly when they are red, it means there is a bearish momentum. This circle actually shows overall volatility and the squeeze in momentum. So what is a squeeze? Basically, it is a pause in any trend. As you know, the market doesn't stay bullish or bearish in linear direction. In fact, the trend pauses for a while before its breakout. This is how it will work out when the momentum is actually squeezed and it is about to break out. Around this range-bound price action, you will notice some green and red histogram. The dark green and red bars actually show gain and loss in momentum. So when the bars are sharp green, it means the momentum is bullish. And when it turns into dull green, it shows the bullish momentum is actually getting slightly weaker. And similarly, when there are sharp red bars, it means the momentum is strongly bearish. And when they become dull red bars, it also means the bearish momentum is getting weaker. However, to confirm our directional bias, we're gonna need the help of EMA. So go to Indicators tab and add EMA. And after adding that, change the length of EMA to 200. And make sure to change its time frame to 1 hour. So now we will stay on the same chart, and we will focus on long entries when the price is above the EMA. And when the price is below EMA, we are only looking to go short. And our entry trades will be based on the squeeze momentum indicator, which I am going to share with you in the next example. In this example, the price is stuck in a range, and you can notice that it is under the 200 EMA. But the squeeze momentum is actually producing bullish bars. Since the price is below EMA, therefore we will ignore all the bullish signals and only focus on short entries, as long as the price is clearly below EMA. Plus, you can mark the nearest price squeeze range for easy understanding. And once the price exits through the range and the squeeze momentum has also produced the white circles, we can enter the short position. You can put the stop loss nearby crossover point of green and red bars on squeeze momentum or nearest swing high, whichever is making sense to you. Now to the bullish scenario. In this example, the price is above EMA, which means we are only looking to go long, as well as the squeeze is evident through the blue circles and the price range. Since we are only focusing on long entries, we can mark the nearest swing high with the horizontal line, or if you want, you can use the rectangle tool to focus the squeeze range. And once the price has broken through the range, along with the white circles on squeeze momentum, we can enter the long position. You can also put a limit order near the horizontal line after the white circles are already formed on squeeze momentum. This is just an example to show you another way to enter trade. Now, just by following this method alone will not make you profitable. The reason is you need to make sure you backtest your pair. As mentioned in previous videos, every pair behaves differently. Plus, the market sessions also influence the price action. So you want to make sure before you put the real money, you have backtested your pair, as well as you also applying the risk management and position sizing. Here is another method to figure out a breakout beforehand. Go to forexfactory.com and under the calendar tab, select high impact news and pick the currency USD. And if you look at the news on 15th of August at 8:30 AM New York time, there was a high impact news about retail sales which came out to be positive compared to its forecast, which means good news for dollar. Now, if you open a chart around the same time on your USD, a breakout is clearly visible. This is how you can confluence multiple things to increase your win ratio.